Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 21st day of January 2015, and this is the Daily Report in gold and silver. Interesting day in the market. We do have the precious metals off slightly to unchanged, with silver actually trading almost a percentage point higher. So really being the opposite of the rest of the precious metals. Dow Jones Industrial Average did close up. Dollar closed a little bit off, and crude closed up about $1 on the day. Gold currently trading $12.93 and change. Puts it off roughly 50-60 cents on the day. Now the low is 84.60 and the high is 13.0620. Interesting high on the day. We did send out a special trade alert this morning recommending that you trail stops higher. We'll talk about the rationale and the reason for putting it where we did on today's report. First, we'll take a look at silver. Silver is really showing some resilience today, up about 16 cents on the day, over $18 an ounce, $18.13. Now it has had a low of $17.92 and a high of $18.58. You can see this tremendous high right up here. We'll talk about silver in a little bit towards the end of the show. So traders, first thing that I want to talk about is I did send out a special trade alert this morning. We did have our gold stop. Of course, we're long at 12.1750. We had our stop at 12.57. I did send out and this was the chart actually that we used yesterday when I sent out that special trade alert. My rationale behind the 57 was this 23% retracement mark. And most importantly, you can see that as this market has moved up, and it's moved up rather rapidly, it has had these kind of critical resting points. You can see the resting point right here. You can see another resting point here and another resting point here. It's simply the market consolidating as it moves up the ladder. Now, at some point, as Paul Volcker used to say, trees don't grow to the sky. They never have, never will. In other words, things do have rational tops and bottoms to the markets. At some point, we're probably going to see this market correct. And if that point comes sooner than we believe it could come, I want to protect the profits that we have. And to show you why we moved our stop from 57 to 74, we want to look at a different chart, and that's a 720-minute chart. If you recall from the last chart, we put our top on the fib retracement roughly at 1300, right where the market was. This one is at 1315. It's a little bit higher, and then we're going to be putting another one up here and another one up here if the market continues to move higher. But the 74 is this retracement right here, whether you call it 23 or 76, it's a matter of where the bottom and top are. In other words, which way you start, whether you start from the bottom or the top. But you have this retracement level at 74, and it also matches up quite nicely to one of these points in which you got these resting periods. And you can see these resting periods are ever so small within the market, but they are there nonetheless. So my sense is that if the market does begin to backfill a little bit, we're locking in a good percentage of profits in the marketplace. Of course, even if it knocks us out at this point, we're in at 17 and out at 74. It's still a pretty good trade. Market's trading roughly at 93, and I originally hit a target. If you recall from when we put this trade on, my sense was that this market would go anywhere between 1300 and 1315, I believe, and the 15 was based upon this top here. Now, intraday, we have seen this market, as I say, go above 13. This chart's not showing it, so I'm going to see if it's updated properly, of course. But this is the key to trailing stops up. In other words, when you do have a dynamic trend within the marketplace itself, and you don't know when that trend is going to end, by trailing a stop up behind the price point, if you're long, of course, what you're doing is trying to capture as much of that move as you can. Of course, the flip side of the coin is that if it's really range bound, meaning when it was trading, for example, between this particular point here and this particular point here, any kind of strategy within a range-bound market of trailing stops is going to really almost guarantee that you only get about 40 or 50% of that move. Now, that is acceptable to me as a con, because the pro is that when we do catch these big moves, and we don't catch them very often, we might only see a big move in the market maybe 3, 4, 5 times a year, but when we do catch them, we get significant profits. This hopefully being one of them. It's already a really good trade. We've got some solid profits in there, but to me, a really solid trade is $100 profit in gold, and that's what I would be shooting for. The question is whether or not the market has the room to go there. As you can see, it's hit 1300 and it is backing off a little bit. So whether we see some profit taking coming into the market, if in fact that does happen as we go into the ECB meeting tomorrow, we are still prepared and we are positioned properly. So traders, as far as the other markets that we do follow, how they're looking on today's trading activity, this is the Standard & Poor's, the E-mini. This is a short-term 720-minute chart. We did have the market move higher today, but we can see a little bit of resistance that has come into the market roughly at this 23% retracement level of 2025. The dollar, which has just been a roaring lion, let's go ahead and line this up. You can see, we'll try to kind of color this in a little bit, but you can see this red candle that's appearing right now just above 93. And that is showing us a little bit of resistance that has come in the market. As I said, slightly lower. We haven't seen that in quite some time. Looking at this weekly chart, you can see over this last month, we've seen nothing, but I also see this gap in the market. So we'll have to see how that plays out. And traders, we're looking at oil. Oil trading 47.56. According to the charts that I had been looking at, we had seen a lower pricing. We'll really have to go, or excuse me, a higher pricing. You can see that right here. Oil up ever so slightly on the day. And traders, we're looking at a daily silver chart spot market. You can see this dramatic high that it hit today, 1848. Market's currently trading above 1810 right in here, but it is above this particular line. And to me, that line is important, and let me show you why. We really got to go ahead and compress this chart. When we do that, what we see is a real area of potential resistance. Now, we talked about this when the market was at about 16 or 17, that I really didn't see any resistance until we hit this particular area here at around 18 to 1850. And lo and behold, the market hit a high of 1850 and came back down. So I think we were right on in our projections in terms of both gold and silver, where we thought they were going. They hit our mark and are now backing off. The question is whether or not they'll find support in this area and begin to move back to its rally mode. And traders, lastly, we are going to be adding a new section to the show in which at the end of the show I will be answering questions from subscribers. Simply email them through the help desk or through the comment section. Any way you want to get them to it. My assistant Conrad goes through them and then hands them to me. If we do not answer them on the air, we will answer them one by one via email and get back to you, either that or for Skype. But a question has come in from a gentleman who trades a GLD, and he's asking, how does he address stops when I'm putting stops in dollars based on a futures contract and he's putting them either in GLD or GLD options? Now, it's a very, very complicated answer, but to put it simply, what you need to figure out in all circumstances is for every dollar move in gold, how much did that option or did GLD move? And you'll get a percentage. So if you're having a 70% move of what you see in the overall futures contract compared to the options, or a 50% move, that's going to give you a ratio, and that ratio will allow you to find a place to put that option that corresponds, or a place to put a stop in your GLD, or an exit point in your GLD or GLD option, by figuring out the percentage move and then adjusting your exit strategy accordingly, meaning adjusting it to 50%. So that way you have a specific target. Again, it's very, very complicated when you address this question, but it's a very, very critical, important question. For those that have specific questions and want them answered and addressed on air, we will be doing this at least 3 times a week. So I invite you to send in your email comments and questions. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.